Can everybody hear us? Okay. Hi, everyone. Hello. So I'm Victor. Okay. So we hope to. There's one other person that's meant to sit here, but unfortunately, he's not available. So I'm hoping that three of us can actually get this going, and we'll be talking a lot about stable coins. Just to narrow things really, really quick, we will be talking about stable coins, but focusing on Africa and its adoption.
Let's just check quickly. Can everybody hear us now? We had a bit of a sound issue. Okay.
Oh,
Matt.
okay.
Hello? There we go.
Yes.
Now we're live. Thank you.
Now, Michael, we need to hear you very well because, Matthew. We need to hear you very well because Matthew's representing Tether, if I'm correct. And just to set the ball rolling, Tether happens to be, if memory serves me correctly, one of the stable coins that I will consider having USDT, that's responsible for USDT, correct?
Correct.
Yes, so that would mean you're probably one of the, I would say the OGs of stable coins, or the ones that started the stablecoin journey. And, but most importantly, currently also doing a lot of work around, which we would like to hear from you. So I won't waste much time, so I'll just give you the floor. So for you, Matthew, I'll set a little bit of context. We all probably know what stable coins are, so I'll work with that assumption. So we're not going into that detail. But I will want to streamline our conversations to the two types of stable coins that we all know. Okay, which is stable coins that are backed by currencies, normal sovereign currencies of countries, of which Tether happens to be doing that for USDT, which is obviously backed by the US dollars. And the other part which we'll not really delve into, but I think is relevant for Africa, is actually stable coins that are commodity backed. Which, of course, yesterday, the Director General of one of the Security and Exchange Commissions in Africa was saying something that if Africa could unlock its entire commodities and back it up by some form of coins, that the liquidity that will be available to Africa and its development will be so significant. So, Matthew, how would you describe the stablecoin journey as far as Africa is concerned from your experience so far to date?
Thanks, Victor. So for those of you who don't know me, I'm Matt. I work with Tether as part of their Africa expansion team. And I'd love to talk a little bit about some of the things you mentioned there. So Tether is most well known for USDT, which is the largest and first US dollar-backed stablecoin, issued initially in 2014, so it's been around for over 10 years now. One thing I'd love to add is that's, of course, not the only stablecoin that Tether issues. The one that talks a lot to the commodities that you mentioned is XAUT, or Tether Gold. And that's a token that is linked and reserved fully by gold in a Swiss storage facility. So there really is a great opportunity when you talk about the continent of Africa and stablecoins, not just to think about fiat currencies, but to think about commodities. Where that's also particularly interesting is with the launch of one of Tether's new products. And I'm not here to push Tether products, but Tether has recently launched effectively a white label tokenization platform that any third-party government, company, private, public, whatever it be, can leverage that particular technology to issue stablecoins or tokenized versions of commodities, for example. And by doing that, you do stand the chance to unlock a lot of value. You can create like liquid, transparent markets for commodities in an African country. So there's a lot of potential there and something that's really exciting. To talk a little bit about USDT and its adoption on the continent, it's really an awesome story, in my opinion, to find something that has really found what I would consider to be product market fit. When people talk about startups, they always think about product market fit. does this product serve a need and a desire, and is the solution actually worthwhile? USDT was not made initially to be this solution for consumers in emerging markets, but it has really found product market fit in emerging markets where customers are looking for an alternative to their local fiat currencies. So that's something that we see across the continent quite a lot, is people looking for alternatives. And that is often driven by the fact that they feel left behind almost by the government and by the optionality that they have for themselves within each of their local markets. And USDT has kind of filled this hole for a lot of people.
In fact, that's really, really interesting. And I think, Hans, I'll be coming to you now. And the key word will be adoption, right? Matthew mentioned something really, really significant, and that's the fact that USDT came out, but almost sort of like the product faked, Africa embraced it. So what that would simply tell us is that the need was there and USDT was available. Now, there are three things that we, at least as an African, that I see that has always been the issue with adoption. And it's around the regulators. The regulators want transparency. The regulators want, they're always concerned about the reserves. How do you manage the reserves? Because I don't just want to blow up money in the air. I mean, it's not just air, right? Something else. Then the final thing is systemic risks. So in your opinion, what would you consider has been the biggest barriers to adoption for stablecoins in Africa?
I think if you look at that product market fit for stablecoins in Africa, it's that rising tide that lifts all ships. And that's what makes it wonderful. We talked, well, some of the other talks was about crypto being a store of value and a method of transaction. Now, in this case, obviously, in stablecoins case, and I'm looking at it from a Binance perspective, we see both. So you see, for a store of value, you can only buy Bitcoin if you have stable. I mean, you can buy dollar, but it's a much smaller trading pair. So in that perspective, firstly, very, very important to have that counterpart for the trading pair. And then for transacting mechanisms, very useful. I talk about the rising tide that lifts all ships, but not all banking systems in Africa is equal. I think in South Africa, we've come accustomed to a very well-working and sophisticated banking system. And I think that's why you see it lesser adoption. But you look across the border, all across Africa, whenever there's not sufficient liquidity of a local currency or there's hyperinflation, that's where stablecoin comes in. That's when I think the two firms you see on the stage here, Binance and Tether, really start working together, and you really see people transacting in something that they know they can trust, they know that'll be there, and they know there's also a receiver for. So it's one thing to have something, and there needs to be a market for it. To your question of systemic risk, that is something I think everybody needs to look at. I think having the collateral, Tether is well known for the fact that they're very open and transparent about their collateral reports. We get to a point, though, that I think if you look at the US per se, we are talking a lot about US debt levels. We talk about how sustainable that is, the rate at which debt is now created. I think that's something we do need to keep an eye on. But it's kind of a dichotomy as well, where you need to have debt issued in order for someone like a Tether to hold that debt as collateral to the stablecoin. But at the same stage, if the currency becomes too volatile and too unstable, that creates its own issues. So I think that the balance is somewhere in the middle. At the moment, that works really well. And long may that be.
Excellent. I noticed something that either of you could take this question that I'm about to ask, right? I think it was about 2 months or thereabout ago, Nigeria, through the Security and Exchange Commission, actually went on this very aggressive, I'll say, drive to, license virtual asset service providers. They call VASP. And one of the very critical organizations that they actually have on the pathway for licensing is a company that has what is called the CNGN, more like a stablecoin for Nigeria. Okay, and incidentally, we're speaking yesterday with the SEC DG as well, But I don't see a lot of what I would call partnership, because like you said, Binance and Tether, you guys are what I would call the more significant parties to this. So what are you, either Binance or Tether, doing to try and embrace significant things like this, right? Because if I also look at the landscape, that might be the first stable coin, registered, right? So are there efforts, or are these things that you're still looking at? Then finally, so that you take this all at once, one of the speakers that came on today for Interstellar, which of course I happen to be a part of as well, we just did something with the Pan-African, we're given permission to announce about the Pan-African Payment Settlement System, Afrexim Bank. I'll call them the central bank of all the central banks. And those kind of organizations, I think synergies should start happening. Because that way, when you touch just one of those kind of organizations, you're touching all the central banks, ultimately. So, and I know what they're doing also has a stable coin flavor to it as well. So are there existing or plan or roadmaps for either Binance or Tether? Either of you just quickly can take that. Yeah. Matthew or Hansen.
Let me start with that. I think out in the open, we've had our issues in Nigeria. I think to bring these CBDCs aboard, we're about the freedom of money. So if that's about the freedom of money, that's what our users want. We should find a regulated way to make that happen. And that part of that, though, is the ability to trade that specific coin for whatever our users want, i.e. what's listed on the exchange, be that BTC. And by the way, BTC just got a new all-time high just before we got on stage, so it should be mentioned. But that's what the users want, and that's why it's there. So it's that interplay and that interconnectivity. I think the corporates of Nigeria, like many corporates in all over the world, at some stage would like to start having a Bitcoin reserve. MicroStrategy led that charge. I think corporates all across the world will start doing this. So it's about the ability to accommodate that as well on a regulated basis in a way where it works for everybody and it stimulates the economy. Then it works.
So I think practically where Tether might be able to support in something like that is talk again to the tokenization product that I mentioned. You can theoretically leverage the Tether tech stack to issue a new stablecoin, and whether that be a CBDC or a private stablecoin or a commodity-backed stablecoin, you can actually leverage the technology. So you remove a whole bunch of work that needs to be done in order to actually tokenize this asset. So that's the one thing that I will mention. And something else that I just want to talk to briefly is the fact that it doesn't make sense to tokenize everything. And in particular, now I'm talking to certain currencies also. So there needs to be a clear benefit or end user who would want to use that tokenized representation of fiat currency. So just to also mention that.
No, that's extremely important. Why create something nobody's going to use? I just leave it on the shelf. And maybe that's why the support and synergy of organizations like yourself that's got the subject matter expert experience, markets, should I say market data and understanding need to work better, because the panel we are talking today, we want to leave here being sure that the adoption of these stable coins increase in Africa, right? But the thing we're seeing loads and loads of them. But just to throw out one question there now, the regulatory landscape. How has it been for you, and this for you, Matthew, because USDT still remains the guys out there. Tell us the story as far as Africa is concerned with the regulatory landscape and how you guys have navigated through that and what is happening at the...
Yeah, so in Africa and also specifically in South Africa, we're really open to working with any of the regulators, any of the working groups. We have an open door policy effectively, and we are trying to proactively engage regulators. For now, it's not been an issue or an obstacle to business, but this is obviously one of the key risks for the business. So just an open door policy, I would say. And
to do that, if there's anybody here in the audience that wants to work with you, what do they do? Just walk up to Matthew?
Find me afterwards or find me on LinkedIn.
Okay. Now, still on the regulatory side. So this for you, Hans. Now, obviously, we all know what happened in Nigeria. It's not a secret, right? And it all still had to do with regulatory. And I probably also would say that probably how it was managed and everything, we're happy it's all behind us now, but that shouldn't still stop us because I believe Binance has got a very robust plan for Africa and the entire ecosystem. So tell us the story. What is Binance doing, or is there anything that we should expect, again, around that area?
We will continue working with regulators where we are, period. The Nigeria story, as you say, we wish to continue collaborating, get into constructive dialogue. I want to emphasize the very important role we played and continue to play in Nigeria. I think this is obviously South Africa and a South African forum, but I do want to put it out there that it is an important market for us, and it's important for us to support our users in Nigeria in the best possible way and in the way that's most constructive for the economy as well.
Absolutely. Absolutely. And, I also want to say this because now, this might, because I'm here with Tether, and there's also USDC. Yep. And it's also a stable coin. And we see the penetration and everything coming into Africa. Does Tether, like you said, there's an open door policy, have what I would consider to be already structured means of engagement? Because I've seen a few people that has come to me before now, but this was USDC, where they're not really that open to engaging with certain blockchains. Like we all know, Tether has got, whether it's ERC20 or TRC or whatever, and all of that. And that time I got that news, I felt a bit concerned because you are leveraging a market, then you should sort of work with the ecosystem. And I'm sure Binance is doing an amazing work, not to blow your toot your horn, but this is for Tether here. Do you have that kind of plan? Because this USDC, again, not you. Again, I don't have any facts, but I can say this. So what are you guys doing?
Yeah, so talk to your point, which I understand to be like, how do you approach issuing USDT natively on a new
Correct.
blockchain?
New blockchain, correct.
This is not the core of my role, but there's a team focused specifically on this. And what I will say, there's costs associated with doing something like that. And you also don't want to dilute, have 1,000 options, right? So wherever it makes sense from the perspective of, I would say, clear use cases. So I'll talk to Telegram and Ton as an example.
Yeah.
It made sense to list USDT on Ton because why? Telegram has 950 million users on the continent. So there needs to be a clear kind of why. Tether's not just going to do that for every blockchain because you can actually very easily spin up a blockchain. There needs to be a clear kind of use case.
Yeah. So what I hear you say, sorry to interject, is that Tether would work with just volume, not strategic reasons.
No strategic reasons for sure. I think it's a case by case basis, really.
So let me say this, maybe you would also respond to this. So because the reason why I say this is just like someone that says he wants to get a job and he says he don't have any experience, that I wouldn't get you on board. But the person wants an experience because, practically CNGN, for example, which was just happens to be, by the way, the first licensed, token, stable coin. Now they might not have the kind of traction of having what a Ton has, right? Based on your strategic reasons, the fact that they're licensed by a security and regulator, shouldn't that be enough reason to maybe search, for example, just saying hypothetically, work with them because they're still starting. I mean, and that backing already is something. So that's where I'm coming from.
Chicken and egg problem, yeah.
Exactly.
But I think as long as there's a clear, logical and strategic reason behind making that decision, then it makes sense. Team.
Hence, you want to speak to that?
Yeah, I think just to come in as well. I think you talk about, let's use the labor analogy of experience. The precursor to experience is potential.
Sure.
And this is what our firms do: is we are able to identify that potential,
absolutely,
to quantify it, and execute on it.
Absolutely.
So that's what we do. And full kudos to these guys. If there's a market, they'll be there.
No, 100%. I mean, again, we're in a panel here where we're just touching everything, whether it's the white elephant, everything, yeah? So, I mean, I will give it to USDT because I know you guys have been around. But again, because we're talking about where Africa is at right now with adoption, with stable coins, CBDC, with tokenization, that synergy to work with, existing, or should I say performing African entities will be a very significant one. And I probably would say that authoritatively because my organization, for example, when we partnered and signed with Afrexim Bank, it was insane for us, right? Because they saw that, hey, it was time they started working with significant African organizations that had made some significant impacts. And that was what drove it. And what probably the CEO didn't talk about was that they started with Nigeria, Ghana, and Kenya. All right. And in just 2 months, they did I think just a little in pilot, $5 million. But what he didn't say about is also already almost 15 million just testing in just 2 countries with Kenya Airways and one other insurance company. Now, something significant like that, they didn't even see it coming. But it also shows what you talk about product fits at the beginning, where you bring out something and it's embraced that way. So we're looking forward to a situation where for adoption, synergies like that would happen. I mean, these are conversations we hope will increase adoption. And I'm sure that's why we're here today, right? And I want to give credit to the team, the Bitcoin event team this panel, if I were to say, this is probably one of the most practical panels ever. And then we're hoping that after this, some significant things will come. We'll come to you, Matthew, and come to your hands, and then we'll get something done. So on that note, I think we're all good. Any last words from you, Matthew and Hens, and then wrap up?
One thing, I think it's very obvious, but talk about the adoption of stablecoins in Africa. I would think be silly to not talk a bit about mobile penetration and the number of phones, and the fact that all you need to have a wallet that holds stable coins is a phone and not necessarily even a smartphone. And that is a big kind of deviation from having a bank account, I would argue, to some that it's there, it's easily accessible, and I think that's one of the key reasons also we've seen the adoption have.
The author Stephen Kotler talks about playing in the intersections of these flows, and obviously that's what an exchange does at its very core. So for us, it's about not only having a CBDC on the one side and the stablecoin on the other side. It's about connecting those and then realizing that whatever you've got on the CBDC side also enables and empowers international trade, which, again, using Nigeria as an example, is crucially important. And if you get that right, then it works very well.
Awesome. Excellent. Thank you, gentlemen. Thanks for your time. And I think our time is done. Thanks, audience, for listening. We hope to